What is up, everyone, and welcome back to Explain the Charts. Today is November 16th, 2025, and we are taking a deep dive into a very turbulent market for Ethereum. First, we're going to break down the flood of conflicting news headlines that are driving the price, and then we'll jump into the charts to see what the technicals are telling us. The dominant story over the past few days has been overwhelmingly bearish. We've seen reports of Ethereum plunging below the $3,200 mark, with some articles highlighting an 8 to 10% drop. This sell-off appears to be fueled by significant institutional outflows, with US-listed spot Ether ETFs bleeding over $1.4 billion since late October. Adding to the pressure, data shows that long-term holders, specifically those who've held for 3 to 10 years, have accelerated their selling to the fastest pace since early 2021. Liquidations of long positions in the perpetual futures market and concerns over the Federal Reserve's interest rate policy have also been cited as major factors weighing on the market. However, the story isn't entirely one-sided. Despite the price drop, crypto whales are on a buying spree, accumulating over $1.3 billion worth of ETH, signaling strong long-term conviction. Furthermore, on-chain data shows that the balance of Ethereum on exchanges has just hit a 2-year low. This suggests tokens are being moved into cold storage for long-term holding or staking, which historically points to a potential supply shock ahead. So we have a classic battle between bearish short-term fund flows and potentially very bullish long-term supply dynamics. Now, let's see how this intense news cycle is reflected in the price action, starting with the big picture on the one-day chart. Over the past year, Ethereum has been on a wild ride, rallying from lows near $1,500 in April to a peak just shy of $5,000 in August. Since that August high, we have been in a broad downtrend, characterized by lower highs and lower lows. We saw a significant rally attempt in early November, but it failed to gain traction and was met with heavy selling pressure, which perfectly correlates with the news of ETF outflows. The last few daily candles are particularly telling, showing sharp declines with significant bearish momentum. On November 13th, the price plunged over 5%, followed by another 3.5% drop on the 14th, breaking through what many analysts saw as a critical support level around $3,325. This has established a clear bearish trend in the short to medium term. From this daily perspective, we can identify our major levels. The most immediate and critical support is the recent low, right around the $3,050 to $3,100 zone. If that level fails to hold, our next major support area is down at $2,700, a level that acted as both support and resistance earlier in the year. To the upside, the first major hurdle for bulls is to reclaim that broken support at $3,325. Above that, we would be looking at the $3,600 to $3,800 range, which acted as resistance during the recent failed rally. Let's zoom in on the daily chart, focusing on the action since the beginning of October to better visualize this recent downturn. Here you can see the rally that took us from around $3,800 to over $4,200, followed by a sharp rejection. The market tried to consolidate and push higher again in early November, but was firmly rejected before it could retest the highs. This failure to make a higher high was a significant warning sign for the bulls. What followed was the sharp, multi-day sell-off we've been discussing, taking us right down to our current levels. The price is now consolidating just above the psychological $3,000 mark after finding some temporary footing. Now, for a more granular view of the price action during this intense sell-off, let's switch over to the 15-minute chart, looking specifically at the past few days starting from November 13th. Here we can clearly see the waterfall event where the price cascaded down from the $3,400s. The selling was relentless through the 13th and 14th, with very weak and short-lived bounces. Price finally bottomed out around the $3,054 level on November 14th. Since that low, we've seen an attempt at a recovery, with the price grinding its way back up on November 15th to close around $3,166. This price action is forming what could be a short-term bottoming pattern, but volume has not been particularly strong on this bounce. The immediate challenge for bulls is to overcome the intraday resistance levels, with the first significant one being around $3,230, a previous support level that is now likely to act as resistance. Returning to the daily chart, let's put it all together and outline the potential scenarios. The bearish case is currently the path of least resistance. Bears are in control of the trend, and the macro news supports further downside. If support at $3,050 breaks with conviction, it's highly likely we see a swift move down to test the next major support zone at $2,700. Some analysts have even called for a drop to $2,500 if the selling pressure from long-term holders continues. This seems about 60% likely if we lose the $3,000 level. For a bullish reversal, bulls absolutely must defend this $3,000 to $3,100 zone. We need to see strong buying volume come in to absorb the selling pressure. The first sign of real strength would be a decisive reclaim of the $3,325 level, turning that broken support back into a floor. If the whale accumulation continues and sentiment shifts, a rally back to the $3,600 resistance area is plausible, but less likely in the immediate short term. I'd place this scenario at a 40% probability for now. Long term, the picture remains fascinating. The bearish price action is clashing with the bullish on-chain metrics. This could mean more short-term pain, followed by a very strong recovery later if a supply shock does materialize. To summarize the key takeaways, the most important level to watch right now is support between $3,000 and $3,050. A breakdown here reinforces the bearish trend with targets at $2,700 and potentially lower. To the upside, bulls need to reclaim $3,325 to signal a potential reversal and begin a move toward $3,600. The key thing to watch for is volume. A high-volume move through one of these key levels will likely indicate the market's next major direction. And finally, please remember that this is not financial advice. This content is for educational and informational purposes only. Cryptocurrency markets are extremely volatile. Always do your own extensive research and consult with a qualified financial advisor before making any investment decisions.